Good morning and welcome to the market forecast. Today is Wednesday, May the 19th. I'm John Hoagland. Thanks for trusting me with your time. Lots going on, lots in the news, lots of things to focus on in the markets today. We've got a lot to talk about. Let's jump in. If you're already in the markets, we're seeing some decent opportunities already. Crude oil leaving the opening range at the high of the session so far, looking right down towards weekly kickoff low. We've got a lot going on. It's 9:30 Central Time today. The EIA petroleum status report is due out. Some news about crude oil we're going to talk about shortly. 1 o'clock Central today, the FOMC minutes are due out at the same time as, guess what? Group coaching, putting the link in. We got a whole lot of people coming into this one. Hopefully, we'll have some really good questions. I've got some questions that I've got to set up from emails that were sent in. Sorry about not being here for it last week, but we're going to see what we can get accomplished this week in group coaching. Again, 1 o'clock. It's going to be interesting. We maybe try and keep an eye on the markets to see if there's anything unusual in the FOMC minutes. Usually not all that impactful, but we never know. As far as news is concerned, we can all see that U.S. stocks are under some selling pressure, with tech stocks leading that push to the downside. Also, inflation has been blanketing sentiment over the past couple of weeks. Especially, I guess, after the strong earnings from Walmart and Home Depot yesterday indicated so far consumers are willing to pay the extra prices passed on to the consumers from major retailers. Cryptocurrencies have taken a little bit of hit overnight as China has refreshed its ban on crypto trading. Fed minutes and inflation. The UK PPI has risen, big rise last night, and it's at its fastest rate in 9 years. Yet more inflationary news. Crude oil on its way down, just testing weekly kickoff low right now. There was a rumor, I guess, created in Russia about progress in negotiations with Iran on the UN accord, and that has some price pressures into crude oil. Now, last night, the API announced a kind of an anemic 620,000 barrel boost in crude stocks here in the U.S. EIA is looking for a little bit more than that. They're looking for an increase of 1.6 million barrels. So certainly some pressure on crude oil testing within 2 ticks, just 2 ticks through that 63.50 weekly kickoff low. It's going to be pivotal for us today. Remember, the opening range is the high of the session. That's going to be an early indication of seller control if we can't hold above this weekly kickoff low and last week low, which is approximately, well, we're going to see that in the charts in just a second. Make sure that you like, share, comment, question, feedback, questioning, and heckling are always welcome. Subscribe to our YouTube channel. Looking at the VIX this morning, up over 10% with our equities on the downside, 23.58 last I checked. Dollar index up a little bit this morning at 89.93 last I looked, and the 10-year yield had a nice little boost last night, back up around 1.65%. So things certainly on the move. We're going to be looking at a lot this morning, so I'm going to jump into the charts relatively quickly. Welcome. Glad you're here. Join me for the group coaching today. Again, 1 o'clock. Always one of my highlights of the week. I always enjoy the opportunity to sit and chat traders with traders. All right, let's take a look at what's going on here. I've got the 30-minute chart here, just watching the open in crude oil, but I'm going to start here with the daily chart. All right, so it's been hey, hold on a second here. Let's make this so we can all see it. We've seen, some pretty decent upside structure maintaining, since about the middle of March. We're at risk of changing that today. Okay, we have this trend line here that comes all the way back here, but we have 1, 2, 3, 4, 5, 6 points of contact, usually going to be a pretty strong trend line. We are now trading below it. We have driven below it on the open, right towards the next important inflection level, which is weekly kickoff low of 63.50. Last week's low, to be precise, 63.12. So this whole area between 64 even and 63 even is going to be pretty pivotal. If we cannot hold these levels, we may move into a downward market state, which is a bit surprising. A lot of banks and economists talking about crude oil getting up to about $80 a barrel. It's never going to be a straight line, but we've got some decent opportunities for us this morning. Take a look at the 30-minute chart here. We've got an overnight addition. Well, we've got open interest adding about 9,000 contracts on this down move yesterday. It's indicating not long liquidation, that's new selling coming into the marketplace. Settlement is all the way up here at 65.50. We've got all overnight shorthand shorts in this market, but they're finding what they were looking for this morning. On the U.S. Open, sellers continued to come into this market and in a relatively strong way. As long as we can keep this opening range high, which is 64.06, I'm going to put a little hashtag there, a little mark there so that I can just visually see it there. There it is, and I'm going to make it vivid, so I'm going to make it red so I can see it. There we go. There's our opening range high. If we can't take out that opening range high, we've got a little bit of a gap. If we can't close that gap relatively early, we're going to be looking for continuation in this move to the downside. We've got a little bit of a support level here. This is an opportunity to actually look for a long, but it'd be a pretty brave long if you ask me. Probably something I'm not going to fall in love with unless, of course, we take the long and take out the high of the opening range, again, which is 64.06. Sellers in control so far. Our overnight shorts getting what they were looking for. Help in the U.S. regular trading hour session for more sellers to come into this market. If it's a long down here, it's good. It's okay because it's a risk limiter, this important inflection level of the weekly kickoff low, and then last week's low below that would be another visual target for shorts to lighten up, or another opportunity for us to look for a long. But the way this market is set up right now, I'm not really that interested in looking for the long. We may actually hold support at one of these levels before the EIA comes out. But if the crude stocks number comes out higher than expected, is that fundamental information going to push us lower, or is it going to be one of those things where we're going to sell the news and sell the rumor and buy the news? We've got a whole lot of shorts in this market, and overnight, as soon as they get the idea they're not going to continue to get paid, this market could give us another opportunity for a better trade location for shorts as the day goes on. Watch that opening range. One last time, 64.06. Let's take a look at the E-mini S&Ps. All right. So we've got a little bit of a chink in the armor here, don't we? We've got weekly kickoff low here, 40.70, where it is trading at right now. The 50-session exponential moving average lining up very nicely with the weekly kickoff low of 40.70. This is an important inflection level. If we can't find support here, it's going to be a pretty easy move down to test last week's low. If we do find support here, then we're going to find support here. We've got a lot of overnight shorts here. We lost 22,000 in open interest on this move to the downside yesterday on low volume. Well, this isn't very healthy for a downside market. An acceptance below weekly kickoff low could create another new market state. We've been higher. Overall, we're still holding higher market state, but if we can't hold this low, we may start to create a kind of a short time or medium time frame downside structure. Again, weekly kickoff level here is an interesting spot for an execution, even here before the open. Yeah, the volume yesterday in open interest was not indicating a healthy downside auction. Usually down days, we bring in more volume. We brought in less. We brought in less. Are we coming into rollover? Well, we're kind of early in rollover to be looking at volume falling off in the front month so far. So not looking at this as a very healthy downside auction. Things can certainly change today. We are, of course, waiting for the FOMC minutes to come out, which may kind of subdue some of the bigger opportunities or some of the bigger things that may be available for us today. Investors do seem a little bit more on edge. It seems they're a little bit quicker to react to any bad news. Keep that in mind. Headline news is always out there, so make sure you manage your risk, manage your stops. Do not lose those stops. Keep those stops in. Protect yourself with those stops. All right, the 30-minute chart. Here's what we call, in profile land, a late spike. When we open in the late spike or below the late spike, it indicates acceptance of lower pricing, settlement all the way up here at the bottom of yesterday's range, 41.23 even. Obviously, we're going to be opening below the late spike. We're going to have a large gap that's going to be very difficult for us to close. We are flirting with this 40.70 weekly kickoff level. We open lower and leave the opening range at the high of the session. There is space down below. Space down below. Last week's low is down here, and I think it was right around 40.28. That's going to be a 40-point move if it does come to fruition. Gap rules, not much of a chance of us closing this gap. Pretty low probability, even though we do have a lot of overnight weaker hand shorts in this market. They're going to be looking for exactly what the crude oil traders were looking for from last night. They're going to be looking for a help from the longer time frame traders who, below weekly kickoff low, may be forced to adjust inventory. They may come in here selling this market. It's going to be a very interesting and fascinating day. Watch that opening range trade, that first minute, 8:30 to 8:31. If it's at one extreme or the other, might offer us a pretty decent opportunity today. The NASDAQ, we have holding downside structure relatively well. Lower highs, lower lows. Are we going to make another lower low today? We are opening below the weekly kickoff low, which is 13.023. And we are more than likely going to test last week's low, which is, to be precise, 12,915 even, 12,915 even. So we're well on our way to doing just that. Again, look at how low the volume was on the last couple of down days. It wasn't all that impressive. And we lost 400 in open interest yesterday, all day yesterday, losing 400. Very innocuous number there. If we continue this move to the downside, I'm going to suggest we're going to have a bigger change in open interest tomorrow morning to talk about than we do this morning. Let's see here. So again, back to the late spike situation. The end of the day yesterday put in a late spike, closed right at the bottom of the session. Settlement 13,212. All of our overnight activity is to the downside. We're holding a lot of short, weaker hands shorts in this market, which sometimes brings the market back to it. But again, these weaker hands traders are going to be looking at longer time frame traders needing to adjust inventory below this important weekly kickoff level. The market is continuing to put in lower lows, lower highs. It's been kind of largely one time framing all day lower. I don't want to step in front of this. This is last week's low right here, just below 12,920. It may be a supportive level. If that doesn't get supported, then we've got a lot more room to the downside with which to look for. Again, it's FOMC day. We may get a little bit ahead of our skis or a little bit over our skis trying to get into these markets. You want to try and stay patient. Sometimes in staying patient, we miss the move sometimes, but it's okay. These markets are always providing opportunity. There may be a move in the opposite direction at some time with some sort of structure that you may be able to catch. I don't want to step in front of these markets early in the session here. And that can change in a heartbeat. If the NASDAQ or the S&P leaves the opening range at the low of the session, that can change it right there for me. That means, hey, you know what? The sellers that we may be expecting to come into this market right off the bat did not come in. Maybe they came in the other direction. Opening range 830 to 831. When it breaks out either side of that, there's your entry. Gold. Now with Bitcoin, which is seems to be everybody's new favorite store of value, taking a punch in the head overnight. Doesn't it look like gold might be a more interesting store of value, particularly if our equities start to continue to fall? Yesterday was a kind of a small day, very low volume, overlapping to higher in range and in value, but not a big range, not a big change in open interest. Innocuous, as a matter of fact. Maybe we squeezed out some shorts. We lost 1,600 in open interest yesterday, so not an impressive day for a continuation or to tell us that the auction process is healthy. We had a nice pullback last night, and that pullback has, since the open, been removed. This is looking like excess down here, and we may see this market come up and test that weekly kickoff high of 1882. Nobody knows for sure, but there's a lot of things going on, a lot of changes going on in these markets, which just further complicates our decision-making processes, but does provide us with sometimes some bigger and some better opportunities. So make sure that you have a plan, stick to your plan. When you have a hypothesis and one of those hypotheses begins to come true, you trade to that hypothesis. If our hypothesis is we're not going to take out the overnight high in gold, there's your spot. There's your look. There's where you look to get in. If you think that the market is going to continue the move to the upside, you look for opportunities to buy weakness. Let's take a look at the 30-minute chart here. So, settlement 1868. We got pretty short here in the London session, and we have certainly responded off the open. We did not leave the opening range at the absolute low. We did take a bit of a look down below it, but the market has driven right back into range and value from yesterday, basically kind of creating a value area special situation play that has already played out. We just put in a new, extended trading hour session high, and are we showing some upside momentum here? 1, 2, 3. 4 days, 4 bars with higher lows and higher highs. We are one-time framing higher. I don't want to fight this. Do not want to fight a one-time framing market to the upside. I'm going to be probably looking for opportunities to buy weakness in this market until the whole moving averages end up above price and perhaps heading the other direction. So, if you're long, I'm comfortable. If you're short up here, I would not fall in love with that trade. I would take a reasonable profit target on that. and then look for opportunities as the day goes on. Market opened out of value and range, went right back into value and range. Pretty decent opportunity for us in that gold this morning. The euro finally finding some life in it yesterday, and well, the day before yesterday. It was yesterday, I think. Volume and open interest indicate a healthy auction process. We broke the upside here. We are now continuing to put in higher highs and higher lows. Yesterday's increase in volume on an up day, adding 17,000 in open interest on an up day like that, there's money coming into this market, and it's more likely to continue in that upside movement. Anything can happen, of course. Just looking at the volume, the open interest, the structure that the market has been creating, this looks like a continuation to the upside. I will look for support at last week's high to be precise, 121.89 and a half ticks. We got 121.94 and a half ticks as our extended trading hour session low. Be kind of patient looking at this, because on the 30-minute chart, we had some overnight shorts. They began to reconcile. We opened really in range and pretty close to inside value, so I'm going to try and stay patient today. This is last week's low. This is a weekly kickoff high. I'm going to try and stay patient, possibly looking for opportunities to buy weakness off the information we saw yesterday. It was an up day. We added open interest. We closed near the highs. We have some overnight shorts in a market that is presenting as a healthy upside auction. So I'm looking to buy weakness in the euro today. And the 10-year, while the 10-year yield has boosted up a little bit, we don't see a lot of action in here, do we? Look at how the volume is rolling off. Why is that? It's rollover for our treasuries. Next week, we're going to be moving into the September, hard to believe, September contract already in the treasuries. We did not see a big change in open interest yesterday. We added 23,000, but in a market this thick, that doesn't mean that much. And we are right back into an area of balance inside last week's range, centrally located inside that range, also centrally located inside weekly kickoff high and weekly kickoff low. Very little response to the little bit of an increase in rates. We did move the market a little bit lower than yesterday's range in the overnight. We're going to take a look at that. And so here we are. Settlement here. Our overnight sell-off as rates kind of crept up overnight. You see the price of the 10-year kind of fall off a little bit. No major moves. We're kind of opening, bringing us right back into range and value, taking out the overnight high, coming back in. Stay patient today. Stay patient. I'll be really trying to focus on opportunities at our overnight low and our regular trading hour session high. We are seeing our whole moving averages holding below price, at least for now. But this market has been so range bound. I'm really trying to keep this kind of on the back burner until there's some sort of decent change in that. So I wanted to kind of go first into the charts this morning because I really felt like there was a lot to talk about. And I'm hoping that what we did talk about is going to help. But I always want to say good morning to everybody. Brian, first one in the room. You win the prize. Theo, good to see you. What's up, my brother Rick? How are you? Bill, James, Jim, Richie, PD Legend, good morning. Caesar, Laura, Vince, good to see you. George, Trading Research, Keith, Tim G, good morning. Ed Z, Ed S, Danny Ireland, good morning. Great day to be alive. And aren't they all? There's the link for group coaching today at 1 o'clock. Troy, good to see you. Mike, the chef Magallanes is here. JD, good to see you, my man. Vici, good morning. Rick, Bitcoin close to a 50% retracement. Doesn't that make our precious metals look a little prettier, doesn't it? Not seeing anything big really necessarily in silver. got a nice return back into range from gold. You have to see how that plays out. Hi, Greg, Colin, Jorg, Lance Gall. What MAs are you using? Well, the longer term moving averages are moving averages that JD likes to look at, so I like to look at them. The moving averages are the 20 exponential moving average and the 50 exponential moving average. There's also the 9 and the 13 Hull moving average that I use to look for changes in short time frame momentum. Good eyes, Lance. Yes, July crude today, Vince. July is where the volume is. Profit Eon, always my pleasure. We've got about 3 minutes. We did it. We got through all that information in enough time for us to take our deep breath and be ready for today's trading activity if you're not already in. Always feels good to take that deep breath. Make sure you work those stops today. Be patient. There seems to be some pretty good opportunities and some pretty good price action, and that tends to make people overtrade a little bit. If it's not part of your plan, don't do it. Former Vice President Joe Biden is with us, ladies and gentlemen. Thanks, Hogue. We'll try not to say anything to make trading even more volatile today, but I never know. Well, we appreciate that, Mr. Former Vice President Joe Biden. But if you are going to say something, tell me first. Bill Phillips, good morning, everyone. All right, so get out there and profit today. I will be with you for the look. Here's the link. Oops. Control V. Here's the link. Just go and sign in. 1 o'clock. I'll usually open up the meeting about 10 minutes before that. And I'll look forward to seeing you there, Luck. Looks like it's going to be a full house this time. We wasn't available last week to do it, so I'm looking forward to this one. I do have, again, some emailed in questions. I got to get ready and get those set up as much as I can before then, but always looking forward to that time. So, all right, let's get out there and profit. I've yammered on long enough. We've got just over a minute before the equities open up. Be prepared. Follow your plan. Have a hypothesis. When that hypothesis begins to ring true, trade to that hypothesis. Luck, we'll see you then. Trade well, everybody. See you at 1 o'clock, and I'll be back at 3 o'clock for the recap as well. Dan should be back with us tomorrow. I'm sure we have all missed him, and we'll be happy to see him. So, anyways, trade well today. Get out there and profit.